All right, welcome. Today, we are taking a deep dive into the Blount County housing market. We've got the latest data from September 2025, and we're going to cut through all the noise to figure out what is actually happening with home sales and prices right now. So let's get right to it. What is really going on in the Blount County, and yes, it's blunt, housing market? If you're a buyer, if you're a seller, or maybe you're just a curious homeowner, you have probably heard a bunch of conflicting stories. Prices are supposedly up, but something feels a little different out there. Let's get straight to the facts. Okay, so here's our game plan for today. We're going to start with a quick market snapshot. Then we'll look at the big picture stuff, prices and the pace of sales. From there, we'll dig deeper to see what's really selling, uncover a pretty surprising split in the market, and then wrap it all up with what this means for you. Let's do it. All right, first up, let's get a clear snapshot of where things stood in September of 2025. To really get the lay of the land, we have to look at the two biggest questions on everyone's mind. How much are homes selling for, and how fast are they selling? Let's get to the numbers. So the big headline number is this. The average sale price for a home is up a very solid 12% compared to last year. Now that sounds like fantastic news for sellers, doesn't it? And, well, it is. But that number on its own really doesn't tell the whole story. Because here's the other half of the equation, the pace of the market. Right now, the average single-family home sits on the market for 52 days. Now, 52 days might not sound like a huge amount of time, but you know what? Context is absolutely everything here. And here is that context. Just 1 year ago, it took only 38 days to sell a home. Today, it's 52. That's a full 2 weeks longer. So the big takeaway here is really simple. Even though prices are still climbing, that frantic, gotta-buy-it-now pace has definitely cooled off. Homes are just sitting on the market longer. You know that 12% price increase we talked about? That's just an average, and averages can sometimes hide what's really going on. So let's dig a little deeper and see which price points are actually driving the market. Okay, now this is where it gets really, really interesting. Look at where the action is. Sales in that, let's call it sweet spot, between $350,000 and $400,000 are up 46%. That's a strong number. But check out the higher end. Sales around the $650,000 mark are up 75%. And then look at this. The $750K range has just exploded with a 300% increase in the number of homes sold. Wow. So you see what's happening, right? The story here isn't just that prices are rising across the board. The real energy, the competition, the actual boom in activity, it's all happening in the mid to high end of the market. This is what's pulling that overall average price up so much. And all of this leads us to maybe the most dramatic story hidden in the data. Because when we pull apart single-family homes and compare them to condominiums, well, we find two completely different worlds. It's truly a tale of two markets. I mean, just look at this contrast. It is night and day. On one hand, you have the single-family home market, which is still chugging along. More homes sold than last year and for a higher price. But then you look at the condo market, and it's headed in the complete opposite direction. The number of condos sold has dropped by a massive 37%, and the average sale price actually fell by 13%. It's like they're in two totally different economies, all happening in the same county. So we've seen that things are, well, they're complicated. Prices are up, but the pace is slowing down, and different parts of the market are behaving in wildly different ways. So this brings us to the most important question of all. What's coming next? Let's look at the clues in the data. Okay, here's what the data is telling us about where we might be heading. First, good news for buyers, there are more choices. The number of homes for sale, the inventory, is up over 10%. Second, demand seems to be easing up just a bit. About 6% fewer homes are going under contract. And third, the flow of brand new listings hitting the market, well, it's kind of stalled out. It's flat compared to last year. These three signals together all point to a market that is starting to rebalance itself. All right, so let's translate all that data into simple terms. What does this actually mean for you? If you're a buyer, the good news is you have more options and a little more breathing room. That crazy, frenzied pace from last year is gone. But, and this is a big but, prices are still really high. Now, if you're a seller, you can still get a fantastic price for your home. But the days of listing on a Friday and having it sold by Sunday, those might be over. Patience is the name of the game now. And so all of this leaves us with one big final question to think about. We're seeing more homes for sale, a slower pace, and demand that's softening up a little. Yet prices are still climbing. So is this the moment that the pendulum of power starts to swing from sellers back towards buyers? Now, it's definitely not a full-blown buyer's market just yet, but the data for sure suggests a pretty significant shift is underway. Thanks for tuning in.